Welcome, everybody, and welcome to the inaugural Intellidex Top Investor Relations Awards. You know, the key question that has been on people's minds is why we're having this event. And the answer is that the investment community needs an external and independent barometer assessing the investor relations function at our listed companies. This comes at a time when investing has evolved to include enhanced focus on corporate governance. Investor relations is not only the gateway for information between companies and the investors, but also has the potential to raise a company's profile. Being the first of its kind, we're hoping that this survey will be effective in improving how companies engage with investors, and that the awards themselves will be the critical assessment of the progress and efforts of investor relations functions. So let us kick off and let's walk you through today's program. I am Nolwadle. I am Senior Banks Analyst of Intellidex, and I will be your moderator today. This is our program for today. We're hoping to be done by 6. I've done the welcome. We're going to have my colleague, Dr. Stuart Theobald, talking about the survey findings. Then we'll have a panel, and then an opportunity for you to have a Q&A. So while we're going through the presentation and the words, keep your questions in mind and then drop them into the Q&A section, and then we will, get our panelists to answer them. And then what we're waiting for is the awards themselves, where we see, our champions, and then there'll be some final comments and close. So let's go on to the next slide so that we can just talk a little briefly about, who's going to be part of our team today. We have my colleague, Dr. Stuart Theobald, who is the Executive Chairman of Intellidex, joining us. And then we'll also have Debbie Miller, who is the Chairperson of the Investor Relations Society of South Africa. And we have also on part of watching on the call as well is our team in Intellidex, which I want to say a big thank you to for the great work you've done in putting this through together. We just want to show you a bit of our work that we've been doing to show you that, we've been working on a lot of projects, and this is just a snapshot of some of the awards that we've been conducting. So we've been around the block, we've been doing this for a while, and we hope that this one is just as thrilling and exciting and insightful as all the others that we've been involved in. So this is our latest edition, which will be available soon, and then, we'll talk more about that as we progress. So as we kick things off, I would like to hand over to Dr. Stuart Theobald to tell you more about the survey findings and the methodology. Over to you, Stuart.
Thanks very much, Nwanda, and good afternoon to everybody. We're really excited that you've been able to join us. I'm just going to talk a little bit about how we went about these awards. Obviously, the starting point, the starting question is, what's the best way to get a view from investors, particularly professional investors, the institutions who allocate their capital to our listed companies, to get their views on who's best at maintaining good relationships with the investment community. That was our objective, and I'll tell you a little bit about how we've gone about it for this year's awards. So first of all, we put together a survey. It was open to all genuine buy-side and sell-side analysts. It was focused on equity, so we did not go into the fixed income world, very much focused on listed companies. The survey was conducted through the fourth quarter of last year, so that's when the field work was undertaken through an online survey. And the broad design of the survey was to ask respondents to tell us who the 5 best companies are in their universe of companies that they cover, and then who are the 5 worst companies. So we, in that way, get votes for top 5 and bottom 5. And then we asked on each of those 5 companies 11 different factors. And those ranged from the quality of engagement with senior management, the quality of annual reports, the quality of notes to the financial accounts, presentations, earnings booklets, etc. And we asked them to score all of those to give us a rating out of 5. And that allowed us to develop some average scores that became important when we got to determining the awards. But ultimately, we ended up with a very rich data set. Let me tell you a bit about exactly who it is that completed the survey on the next slide. There were in total 69 respondents from the buy and sell side, 44 of them from the buy side. These were portfolio managers and asset allocators in several institutions, both large and small. You can get a sense of which categories they fell into from that bar graph on the left. Quite a wide range, maintaining portfolios up to in excess of 100 billion, right? So there were some very large buy-side firms voting. And then sell-side analysts as well. We asked for their input. There were 25 of them who rated companies that they cover. They were drawn from both local firms as well as international firms, and you can see the split there in that pie graph. Having a look then at areas they cover, you can see financials was a consistent area that the respondents were covering, followed by consumer services. That would include retail, consumer goods, industrials, and so on. And then you can see how many companies our respondents were covering, either as portfolio managers or as analysts, some of them with a fairly heavy number, over 30 of the respondents covering more than 20 companies. And also you can see the size focus of respondents. And there was a fairly good representation of those covering small and mid caps. One of our concerns in the survey design was how do we make sure that we do get feedback and input from companies that won't have as large an investor base. And we were pleased that we did get input from several small cap specialists, as well as generalists who included small mid caps in their coverage areas. If we go on to the next slide, we'll have a look at their overall view. So we had some general questions we asked of all the respondents. The first was whether investor relations is important to them in their process of making investment decisions. And you can see that over 80% said it was very important. And there was clear and consistent feedback from the respondents that investor relations really does make a difference to their ability to assess investments and to be able to maintain exposure to different companies. On the overall quality of investor relations, this was not a full-throated endorsement of excellence here, I must say, with 31 rating it good and 15 very good, but also some responding average. We also asked what they thought of the ethics of investor relations, and you can see there a more positive view with 25 rating it very good compared to the rest of the other options. That gives you a little flavor of what went on in our fieldwork and how we did it. There's a lot more detail on the methodology, including all of the questions that we asked our survey respondents. And you can see that in a report that we'll be distributing to everyone on the call on Monday. So do look out for that, and please have a look at that detail. And I would be very grateful to get any feedback on that methodology. This being the first year of the survey, we have already learned a great deal from the process, and we'd be very pleased to get any input you may have to help us develop it further. I'm now going to hand back to Nwande, who will take us through a panel discussion. Over to you, Nwande.
Thank you, Stuart. So yes, we're going to kick off with a panel discussion between myself, Stuart, and Jennifer. I'm sorry, I mean Debbie. Debbie. So, to get things started, before we really get into the meat of it, Debbie, what is the IR function supposed to do?
The IR function really is the integrator between the market and the company itself. It provides not only outward bound information to the market, ensuring it's produced in a fair, transparent, complete way, but also giving feedback to the management around where things are miscommunicated, where there are opportunities to improve communication, and of course on individuals themselves. The way that you present and so on and so forth. So I think that two-way interaction, and then obviously there's a lot of complexity within the hour function, aggregating strategy, operational performance, the financials. We've seen sustainability and ESG coming up in the ranks and in the importance and in the demands of all stakeholders. So that brings an increased level of complexity. And then, of course, there's regulation and statutory compliance. So certainly a big melting pot. And as communication, and it's interesting we've got that award today, as communication has become more integrated, obviously the alignment between other communication functions like PR, comms becomes increasingly important. You don't just have one platform anymore. We've seen multiple platforms. Investors are taking a lead from all sorts of information. So certainly bringing all of that together, working together internally and externally, a big part of the hour function.
Stuart, having done the survey and the work and seen, the results of this, what do you think, why do you think we need this kind of insights that we've gathered from this work?
I think, investor relations is really about reducing transaction costs and improving the ability of investors to conduct analysis, to identify value opportunity. So it's very important to the efficiency and effectiveness of capital markets overall that we have good investor relations. And we know from some of the international studies that we've done that you get differing standards. South Africa often comes out strongly on investor relations. Our integrated reports, for instance, are above average when you compare to international reports on the detailed information provided. But it's very important that for the health of the South African capital markets, we continue to drive development in the right direction. And that means identifying best practice. And how can you do that? Well, you need to talk to the people that matter, which are the ones making decisions over investments, and get their views. And that really was the prime motivation and why we wanted to go out there, talk to investors, and put together a comprehensive set of results.
And it's interesting that you mentioned that, by global standards, we've got, very good standards. But, if you look at the outcomes of the terms of quality, we had 31, rating good versus 15 saying very good. So, we've still got some way to go to get everyone on very good. So, yeah. Debbie, how should the IR industry be using these findings to improve what they do so that everyone's rating them as very good?
Absolutely. Look, I think investor relations is a function where best practice, as Stuart was talking about, is fundamental. Sharing of experiences, dynamics changed all the time, and it's important that we understand how best to deal with all the circumstances and the issues and the technicalities that come our way. So I do think looking at and understanding how other people have worked with how they produce the information, how they communicate. And when you have a couple of shining stars, and we're going to see them today, so very excited to hear all the awards, but those will stand out and start becoming beacons on which we can learn and grow. And I certainly know that today investor relations individuals and organizations are looking to better understand how they can take these learnings forward. And I think that the benchmark that the top guys send will obviously be used as a test for those that haven't done so well, and in that way we all lift the bar. So yeah, that's, and obviously I know there's a lot of detail. Stuart, I don't know how much you're going to be sharing and how you're going to be sharing that. I know you have a massive amount of detail. We're super excited for you to come to our annual conference and share with IROs alone a little bit more detail. But I don't know how you want to share that. I know there's a lot of information through your analysis, and we're fascinated, as I'm sure all of our members and IROs, investment community, is interested to hear, what we've learned. I think not 100% will be right. So there's a lot of perceptions. As markets flow, it's built on expectation, perception, and I think this whole industry is going to grow so much through this sort of insight. So very, very excited, and I think the beacons of the winners will really help us move forward.
And you've highlighted the positives, Debbie, in terms of what the awards will do and how it will enhance the profession. But there's also a negative side where, some of the losers are going to be put under pressure. So what are the implications for, professionals now in terms of IR? What negative repercussions might this have? Or, what pressure will they now face, given that now we are shining a spotlight on this function like never been before?
I don't see it as a negative. I see it as a massive opportunity, to come up in the rankings and improve. This is something to aim for. So, the guys at the bottom should just take a lead. Look, there has been a history previously. Trust me with your money. Look how well I've done. I don't need to be fantastic at communicating. I think with some of the recent scandals, some of the rock star CEOs that we've seen, that some of that has become less the flavor of the day. And so I do think that the laggards will feel a little bit of pressure. But as I say, I think it'll be more opportunity than we're going to see some sort of major fallout of individuals. Also, the R function, as Stuart was saying earlier, is not a single individual's responsibility. It really is a management, a C-suite, a board opportunity, which the IRO facilitates. I've seen many IROs frustrated by the lack of support from their C-suite. And I've seen, C-suite without IROs really grappling to understand that there is not just setting up meetings and attending them and telling the story. That is not what IROs are about. So I do think that there's great opportunity. I don't think, the hammer falls on a single person. And I'm seeing it as much more of an opportunity and a carrot than any kind of whip.
So Stuart, if you're now speaking in terms of the investor community, what kind of outcomes do you expect to have from them in learning how to better engage with management teams and IR functions after the survey and seeing these results?
Look, I guess the incentive for respondents to have completed the survey, to participate, is that they do it with the intention of creating an incentive for managers and IR functions to serve their needs better. So I think the expectation from the investment community is, okay, we're telling you now what we think. We're certainly open to further advice that we can give on where we see best practice. And we want to see some changes. I think that's certainly the case in some companies. You'll see when the awards are announced that there are really excellent examples of really good IR delivery. But in the booklet that you'll be getting on Monday, we have disclosure on where companies that were ranked near the bottom came out. And I think for them, it's going to be much more of a surprise, perhaps, that they're getting feedback from the market that they really are below average. We are putting that disclosure out there too, and I think that's going to be shocking for some firms. Today, we're talking about the winners, so everybody can have a good weekend, and we'll make life difficult for some on Monday. But certainly the intention is to guide behavior in a better way. And we hope that this is useful, as Debbie made a really important point, that it's not an IR function alone to develop a good IR practice. It really is a whole organization responsibility to engage fully and properly with investors. And the awards can probably help internally to give an external barometer that can be used by an IR function to say, look, we're getting this kind of feedback from the market. And partly this reflects what the market thinks of accessibility to senior management, of the kind of disclosures we're making that are outside of my control. And in that way, help companies, I think, focus and fine-tune everybody's role in a business-wide engagement with the investment community.
Speaking of accessibility to management, having been a buy-side analyst for many periods, you always have these investor conferences. And it's sometimes, especially with the big caps, it's very hard to get the management teams to actually come to those conferences. And instead, you'll have the IR teams coming in. And to investors themselves, they see this as a second-tier interaction as opposed to what they wanted, which is the management team. So I'd like to hear from both of you, is that, how do we change this perception going forward that, it's not good enough to meet with the IR, it's only good enough if it's the management team? And Debbie, maybe you can start with your response.
Yes, this is a tough one, and of course, management is busy running the business, and there is a fine balance. Sometimes stocks people get very interested in a particular stock at a particular point in time, and there is huge pressure on management. I think one of the roles of IR is to be able to step into the shoes of management, but I completely recognize that that investors, especially when they're making that final decision or making critical decisions, want to look in the eyes of the guy who signs the resolution and makes the final call, and that's where they place their confidence. And as much as it's a head decision, there is a heart decision involved in that as well, in terms of truly believing the management. So I can understand the need and desire to meet with management. However, I think in the South African market, particularly, we've got a small market and we have got quite spoiled in terms of access to management. I think it's a two-way street. I think a lot of management really enjoy the engagement with the market. They learn a lot. They learn a lot about their business. They learn a lot about their peers. So it's certainly not a one-way street that they begrudgingly do. And a lot of management really, really enjoy the engagement. I do think, though, that there's a little bit of a healthy tension. I sort of feel like it's one of those things we're never going to get absolutely right. I think that, to expect, and I've seen CEOs have to go out and talk about, I was involved in telcos for a long time. What's the population of the DRC and what's the penetration? My goodness, you filling in your model through the CEO is not ideal, right? If you want to do filling in your model checklist, this is not the role of the CEO, and this is where you need the IRO. If you want to understand the company, if you really want to talk strategy, if you want to understand the big picture. So I think there's a responsibility on management, there's no doubt, and there's a responsibility on the investor relations function to find that balance. But I think there's some accountability on the analysts as well in terms of how they treat their access to management and what they do with it. So, simply having access to senior management in the market small, often the guys have personal relationships, they can pull lines, IRO can do what they like, management's going to talk to who they want to talk to. So I think that there's responsibility in all three places, and there's work to be done on that side, no doubt. I don't believe we'll ever get it perfectly right. And it's a conversation we need to continue to have. I don't think the responsibility is simply on IRO and management. And I would like to push back to some of the analyst side for them to consider what they do with the time with management and how they use it.
Not much to add to that. I think just on your point, Nwandle, and I think Debbie is spot on the events kind of versus other forms of access to management. I think in my experience, the events are very helpful, as is other disclosure and calls and so on. But every analyst is, of course, trying to develop an edge. They're trying to develop a unique take. And that requires having some insights that are not generally available to the market. So that's really, I think, what most analysts are in search of. And often it's very innocuous requests for information. And that's where frustration comes through in some of the responses and feedback that we've had on the survey, that it's just simple pieces of information that analysts are struggling to get. Not, as Debbie says, expecting the management to fill out their models for them, but company specific, non-material, just
Stuart,
simple data.
You're spot on, and I've heard many people talk about IROs as the ministers of defense. They put up a stone wall, they're the access to the company, and so I think you get good and great IROs, and you get not so good IROs, and as in any particular function, some people turn around really quickly, have everything on the ball, and other people are less so. And I think independent surveys like with yours are starting to have external accountability for that. So I only see this as being upside. But you're absolutely right. I saw the question as much more, we want more access to management, which, I know the guys want. But your point around, the role and the role that they need to fulfill in a much more practical way, I take on board completely. And I do think that the survey will go a long way to holding in a public forum accountability for that behavior. So I'm very excited about that.
And I think you can see the breakdown in relationship between the IR and the rest of management, and some of those requests go in. So some of the feedback from buy side is, the IR is really good at trying to answer my questions, but often she just can't, because a plant manager just won't give them the simple bit of information I wanted to know. And so you do get that insight into how things are working internally in a firm. But I wouldn't like the role of having to be the gatekeeper of deciding which investor should get priority over others. It must be very difficult.
Indeed.
And on that point, I just want to, get a view from both of you that, how should IRs manage the fact that there is a lot of cherry picking that happens when it comes to which investors to give the 2-hour one-on-one sessions with versus, a group setting. So that's a big contention that happens where, if you're a big shareholder and you have a significant amount of holdings, you can basically get management, the touch of a button compared to smaller investors. How should we manage that, and even the perception that is happening going forward, and what role does IR have in changing that, if it needs to be changed at all? Debbie, what do you think?
There's no perfect answer. I think it's. I think your point is to be aware of it, to understand it. Obviously, a large holder is important, and you do need to give them the time. But that by no means means that you must completely disregard the smaller ones. And maybe the different ways that you can communicate and engage and support, the smaller groups, or in fact support, a big holder. Sometimes they spend a lot of time with management. They don't necessarily need that edge that Stuart was talking about, which is often a nuanced edge in terms of your feeling around how they're thinking about something, their approach, just their body language and so on. They don't always need that access. And, my experience is that the big investors know their weight, that the big investors know when to pull that channel and when to just use access to information as opposed to access to a CEO or a CFO. So I think that the balance is to be found, and I generally have found the big fund managers and the guys with a lot of money quite responsible about that. Actually, maybe it doesn't feel like that for a small guy, but my experience is that they actually are quite responsible. But it's a tension we continue to manage, and I think this is the nature of IR. It is not a perfect science. It's not 1 + 1 = 2. And it might be 1 + 1 this month, and next month it's 2 + 2. And you really need to be very intuitive, very in tune to your market, very in tune to your management, and to the goings on in your sector and the market generally. So really is nuanced approach depending on the circumstances.
And Stuart, your thoughts on accessibility of smaller firms, smaller investors versus large investors?
Look, I think one has to be pragmatic. You can't begrudge a firm from making judgments in its own interests, and a bigger player is going to be more material to a firm. And I don't think we can be naive about that. I think management who are open do come out in our survey positively. And I think that more than the pragmatic decisions over how you allocate time is a level of accessibility that can be quite time efficient. Just to be able to respond to an email, just to or a WhatsApp or whatever, shows a level of accessibility that's probably quite unintensive. And I think particularly in our financial markets, it's quite important to support new entrants. And I do think firms should be conscious of that, particularly in smaller firms that are trying to build themselves up. It's probably a good social responsibility to make yourself accessible, to not only think about the pragmatic interests of the business all the time. So I think there's rewards in doing things that are positive for the wider investment community, and to sometimes just be nice, talk to people.
So before we, get to our Q&A, everyone, prepare your questions and we'll take them after this question. Debbie, talk to us about the ways forward for IR professionals, especially now that we've got the survey and the awards up and running, and it's going to be going forward for rest for eternity. What are you expecting the way forward for IR?
Well, I mean, for us, and thanks, Stuart, Intellidex, and Business Day, for our strong inclusion in your whole process. We're very excited. I'll talk a little bit about the Irish Society, right at the end. We have a very exciting program lined up this year, and we believe that the heightened interest in investor relations, the heightened accountability is going to increase the demand for connectivity, for information, for networking. And that is exactly the role that the Investor Relations Society, hopes to play. So we're very excited about the awards, and we really believe that the networking and the support that the Irish Society can provide to the community, both investors, buy side, sell side, and we have broadened our network significantly, will really, really be helpful and lift some of the guys who were battling perhaps. And some of the guys that weren't on the rankings at all, perhaps didn't urge analysts that covered their stock to even consider them. So I certainly think it changes the landscape, and I think our role becomes increasingly important and valuable to the community. And I'm really hoping that we can play that role and continue to work with Intellidex, getting the feedback, feeding it back to the community, and working with the particular hot topics and issues that we have as a community.
Yeah.
Yes, and just some thoughts from you, Stuart, in terms of also, the number of firms that joined the survey, and how many we hope to include in the future, especially as it gains traction.
Look, one of the trends in our markets have been a shrinking level of coverage, particularly on the sell side. So we know that there are fewer analysts covering South Africa, and there are certainly fewer analysts covering mid and small cap stocks. And portfolios have also become more concentrated as liquidity has become paramount. So I think we have to lean against that. As a capital market, how do we ensure that there's appropriate visibility and understanding of our businesses in the wider investment community? The answer has to be doing a really good job of getting your message out there and getting the data out there to potential analysts. I guess in an environment like we were pre-global financial crisis, you could really rely on the sell side to do a lot of your work for you. They would be the ones phoning up portfolio managers and pitching your story. That isn't there anymore. So how do you as a company get your story out there in the absence of those channels? And the answer is to do IR effectively. So I think that what we're doing with this process is driving a step up in IR to adapt to the way capital markets have evolved, particularly in the last 15 years.
Okay, and we have our first question from Suhem, and it's in line, with stepping up. There are a number of foreign funds invested in SA corporates now. Is there a way to include them in future surveys? That's for you, Stuart.
Yeah, that's a great question, Sue. Foreign funds are super important, especially in our large caps. We have not explicitly aimed to include them, but you're right, we really should. So I think that's a good thought for us to take on board and see how we can reach out to foreign funds to participate. I think it's a case of identifying who are those emerging market analysts within those funds who are doing most of the work on South Africa and would have the most to say, and trying to motivate them to give us some time to fill out a survey. We'll think about ways to do that. Absolutely.
I just want to add on that, not in terms of, but Sue brings up such an important point, which is relevant to any of the South African companies across all sectors. And that is really how we present ourselves as a country. And fascinatingly enough, we all go out there and we tell our individual South African stories, our individual South African messages. And as we know, that creates sentiment in itself. So I think while we're getting the feedback, I think we should be conscious about how we're representing country as an investment destination through our bilateral chats. So just a little bit of the backwards and forwards in just discussing that topic and thinking about it, really, really important. And I remember some years ago doing some work with the SARB and so on galvanizing a proper effort regarding management, regarding South Africa, regarding the South Africa and the various platforms as investment destinations. So fascinating topic and very, very interesting point from Sue from a number of perspectives.
We don't have any questions yet, but I have one question for you, Debbie. We've moved to a world where, things are virtual. And before, as an analyst, you'd worked for, results events or conferences to really get enough engagement with management teams. Do you think the fact that we've moved to a world where everything we do is virtual means that, IR functions should be more open to having more engagements and setting up more meetings, considering that it's easier setting up a Teams link? Or do you think, it's a bit too much? You don't need to be doing more work just because it's more efficient. How should IR people be looking at the change of, having to do everything virtually now, making it easier and simpler for investors to just set up a meeting?
Oh, I could talk about this topic for hours. So I'm going to keep it to just a few key points, because this is such an important point. And I sit on quarterly reviews with investor relations society chairs from around the world, and I can tell you that this is a hot topic for IROs in Australia, in Switzerland, in the US, in Canada. It is a common theme. And I think that there are a couple of points. One is that initially everybody got a little bit of, on this call, we'll call it Zoom fatigue, where, companies were doing a lot of online presentations. I think the buy side was, in fact, I got some feedback initially, a little overwhelmed, a little too many conferences, a little bit, and it's tough. Online is not the same as in person. That energy is not the same. And so you do need to keep those conversations tight. You need to, keep any engagement where it's outward bound presentations really, really clever. So I think you need to box differently, is what I'm saying, in terms of how you communicate and how you think about communicating when you're doing it online. I think it's become a very, very important channel. Prior to COVID, you didn't see online presentations. They were in person, and most people went to the event. In the last 2 years, I think more and more, all of the results presentations are online. They're done on even LinkedIn channels, et cetera, et cetera. So I think the comms channels have changed forever, and I think we need to adapt to them. However, I don't think it will replace that face-to-face discussion, and that I do believe that as things normalize, we will need to going back to seeing people and getting a slightly different feel and a slightly different engagement that is needed when you're making big investment decisions. And I've seen management teams now starting to all go on roadshow again. And I do think that there is now a much more, as there is with much of the work, much more hybrid approach. And the role of online, important, but you need to adapt your style, you need to adapt your approach, and you can't just take what you were doing in person and put it online. Doesn't work, but certainly an important channel, but you do need to re-engage in direct communication with your investors on a face-to-face basis, obviously on a basis they're comfortable with as well. But I do think both are important.
We have a question. Thank you, Debbie. We have a question from Jacques Devie about how important is debt IR becoming in light of consolidating equity markets? And, Stuart, maybe you can give this a shot first, and then Debbie, you too.
Look, we've started the survey very much with an equity focus, but debt is important. Larger issuers tend to be active in corporate debt. So it's not something that would include many issuers across the market. But I think we would very much be interested in canvassing the views of some of the fixed income fund managers out there who are doing South African corporate credit. They're a very active bunch. They certainly have a lot of opinions, and they, I think, are hard taskmasters for the kind of IR they expect. We know we've been in the midst of this debate over the debt listing rules and what disclosure should be happening through the JSE, and that has been a very spirited debate, shall we say. I think there has been one or two examples, although our public sector more the case, where the information and treatment of debt holders has fallen far short of what it should be. And I think it'd be valuable to try and get some systematic input from debt investors on what that looks like. So it's again one of those things to take on board for development of these awards going forward. I think Jacques would be keen to do that.
And Debbie, your views from IR?
Yeah, interesting. My roles have always been treasury and IR. And interestingly, within corporates, those two, in most companies, have remained strictly separated. I was giving a chat to the Association of Corporate Treasurers on behalf of IROs, and I've had numerous discussions with how the treasurer and the IRO should be communicating, should be engaging in terms of a common story. We know that fixed income have a very different look in terms of cash flows, in terms of understanding, ability to pay. Their look into the company is not a blue sky look. It is slightly different from an equity investor. So we understand there's some nuanced disclosures, there's some nuanced needs, and the take on the company might be significantly different. But the story and the underlying story is the same, and ensuring that you have that commonality and how you're presenting it, the role to the rating agencies, which go out with public reviews. I mean, that's another analyst essentially and another look-see into the market. So, Jacques, there are so many issues when it comes to debt versus equity. I think the other issue is that the number of exchanges, and the number of exchanges has increased exponentially in the country. Obviously, the JSE remains the largest, and I know the basis on which we canvass this first base case assessment. So I think that the issue around equity is still so much in its infancy, and the complexity of adding debt is quite significant. It might take us maybe not a next year issue. I personally would like to see a lot more understanding across the various equity markets, across the equity exchanges, before we start trying to embrace IR into what has been traditionally been a treasury domain in the listed capital markets. But Stuart, this is your area. I think it's a very worthwhile debate, and as I said, very big crossover, slightly different lens. So I think interesting time when it comes to considering which exchanges, and then the different types of instruments. And I think it's important that we take on this IR responsibility in steady steps. So Stuart, I think there's a healthy discussion, and we always open to work with you. Happy to bring in Association of Corporate Treasurers if it's helpful, but I think that there's a worthwhile discussion to be had before we launch into a whole debt piece. It's just my personal view. Maybe I'm being contentious, which is not like me, but
We'll talk before next year.
Okay, we've got 3 more questions. So let me start the first one from Roshni Gajar. Sorry if I'm not saying that correctly. Relative to the IR function globally, how mature is the IR profession in South Africa? And what are the key opportunities to increase strategic effectiveness of the function, particularly with reference to the need to position the investment case for SA companies amid the negative fiscal ratings? Debbie, maybe you can answer that first.
Yeah, I think we've said a lot of this before, and I'm not going to labor it, but there's definitely a huge opportunity to increase and upskill the profession. I think, networking, best practice, mentoring, these are all tools which we want to bring to the market through the IR Society. We can also link up with all of our international peers, and it's something that we're hoping to do. But yes, definitely, look, we're not a laggard. We've said that earlier. I think, there is some great IR practices. So it's lifting the overall bar and it's continuing to grow. I think it's an ever evolving function. I think the communication between the IROs will also help with the investment case for South Africa, 1 or 2 or 3 or 4 people versus 6 or 7 or 10 or 20 around what are the issues, are they different across the sectors, how do you, discuss various points, where are we differentiated, where's the commonality? These things are very, very important topics. So from a South African context as a group, we can certainly learn from each other and I think grow in terms of how we present our story. So I think one, yes, benchmarking, sharing, good. And then of course, how we pull together our own stories around our country to promote investment and ease understanding of the very complex and challenging issues we find in South Africa, is invaluable and is done through engagement.
Stuart, thank you, Debbie. I've got one for you from Matt Warner. You may unpack it in the detailed reports, but was there any ranking of topics that companies prefer to engage on or feel corporates are not covering? Thinking about the increasing importance of ESG and where that sits in the order of priorities.
That's a very interesting question from Matt. And Matt, I can tell you in this survey, we did not specifically interrogate on ESG, which I think was an oversight, because on another study, I can tell you we've been doing a global study on emerging markets and ESG communications, and we have a problem coming our way because the global fund management sector is there's a tsunami of ESG integration happening into investment decision-making. And emerging markets systematically have a problem here because they are not disclosing to the same extent as developed market issuers. And as a result are getting down-weighted on ESG weighted investment strategies. And we in South Africa are going to experience that. Now, that said, South Africa is ahead of the curve. I mean, our banks, for instance, were, I think, among the first in the world to universally report on TCFD, and there are various other factors in which we do well. But I think we have been ahead of the curve, and the curve globally is accelerating fast. So I don't expect that it's going to be that easy for us to stand out for much longer. Just the fact that you're flagging ESG, really important, and it's something the IR function has to fit in alongside the traditional financial and kind of risk information. There's now a huge demand for very detailed data and information about environmental and social impact. It's a whole new skill set that IRs have to develop.
And our final question, unless one pops up in the next 2 minutes, and it's a follow-up from Jacques. And Debbie, maybe you can answer this, is how are AGMs changing for IROs, and is shareholder activism on the rise in SA? And how can this dynamic be harnessed or managed by IROs?
Yes, I think shareholder activism has been very low at an AGM level, but we are seeing that changing. One of the hot topics for us is the discussion around the level of, for example, REM policies just aren't being approved. And they go back 2-3 times. IROs engage with the with the channels that declined their last policy. They make changes. And then through proxy voting, other tick lists, maybe disconnects, the policy gets voted down again. So I think AGMs, the role of IROs, understanding how investors make those decisions, make those choices, and are increasingly flexing their muscle at AGMs and within other contexts, makes the role more important and makes the challenge and the need to embrace the challenge ever more, important.
Thank you, Debbie and Stuart. We have come to the end in terms of our questions. There's no more. And I'm sure if people want to engage further with you, you're happy to answer more questions. So, and we'll, make sure that they've got your details and so that they can, get more insights. It looks like now it's time for the main event, which is the actual awards. If we're in person, there'll be drums playing now, but, we don't have any drums here. So let us kick off to find who are our superstars for the evening. So the first category is the top rated in terms of best market communications. And in third place, we have Mr. Price. Well done, Mr. Price. And in second place, we have BHP. And our winner for tonight is Transaction Capital. Transactional Capital has been rated the best market communications. We're having anyone speaking? Okay, so we just have a minute and then we're going to cross over to Transaction Capital to accept the award. Okay, they are unable to, so I will accept the award on their behalf and thank you. So congratulations to Transaction Capital. The next category is the top rated in terms of best integrated annual report. In third place, we have Mr. Price again. Next time, Mr. Price, you probably move up. And BHP in second place. And the winner is Transaction Capital. So congratulations to Transaction Capital. And I will be accepting the award on their behalf as well. So the most accessible senior management in third place is the Fashidi Group, TFG. Second place, BHP. And the winner goes to Transaction Capital. So that's 3 in a row. Transaction Capital is really doing a good job. Congratulations, and I shall accept on their behalf. So now we come to the top rated small cap category. In third place is a tie between Master Drilling and Energen. Second place, Long for Life. Congratulations, Long for Life. And the winner is Ethos Capital. Congratulations to Ethos Capital. And I don't know if they're here to accept. Waiting for 2 seconds. Okay, we will have Rohan in a second to accept this award. There we go. Congratulations, Rohan.
Oh, Wandle, thank you very
Yes.
much. And great job to Intellidex. I appreciate the award.
Congratulations and keep up the good job and all the best with Brett.
Thank you very much.
Okay, thanks. And our next category is the top rated mid-cap. And in third place is a tie between Attack and Momentum Metropolitan. In second place, we have a tie between Brait and Supergroup. And our winner is Afrimat. Let's take a minute to see if anyone from Afrimat is here to accept. Peter. Well, congratulations, Peter, on making it as the top-rated mid-cap.
Yeah, thank you. Yeah, we are honored to receive this award. To us, our relationships with all our stakeholders are important. Yeah, and we're honored to receive this this reward for our relations with our investors. And I want to thank you, Intellidex, for conducting the survey and for the investors that has voted. And lastly, I want to thank Vanessa and her team at Caterec that's driving our investor relations with our investors. Thank you.
Thank you very much. Congratulations and keep up the good work. And now for our next category, top-rated large cap. In third place, we have MTN. In second place, Nedbank. And our winner is Absa. Congratulations to Absa. And we shall wait a minute so that we can hand over the award. Okay, Alan will be joining us in a second to accept the award. And while we're waiting, I just want to share that all the details of the survey results will be available once we distribute the reports on Monday. And you'll get the whole list. Oh, here we go. Here's Alan. Hello, Alan. Congratulations on making it as #1 in the top-rated large cap.
Yes, thanks so much, Nolwande, plus Deb and Stuart and Intellidex for running the survey. I'm croakier than usual because we had our chief executive's announcement on Tuesday, and we've had 3 days of Bank of America conference since then. But thanks very much for the award.
Congratulations and keep up the good work. And I hope your voice gets better in time for the next one.
Thank you.
Okay. All right. And I think that is one more, a top-rated overall. So this is the overall top-rated award. Oh, sorry, top-rated industrial sector, sorry. In third place is Distel and GrowthPoint. In second place, we have Vodacom. And in first place is MTN. Congratulations to MTN for being the top-rated industrial. And let us wait a minute to see if they will be joining us to accept. And we will have Luelle accepting on behalf of MTN as the best industrial. Congratulations, Luelle.
Thank you so much. Good afternoon, ladies and gentlemen. I'm extremely honored to be receiving such an important award on behalf of our leader, Tato Motlanthe. He's currently on roadshows. So we're earnestly grateful for the recognition that we've received for the team's hard work. Thank you to all the teams in MTN who support us. We really appreciate it. I'm privileged to work with experienced colleagues, Luyanda Mbeki, I must mention him, and Tato Motlanthe, and a very supportive C-suite to take on board our guidance and advice. As MTN has evolved, so has the IR function, and we look forward to continuing the hard work, improving the quality of the IR function, and in turn creating shared value for all our stakeholders, especially our shareholders. So thank you once again. We are honored to be accepting the award.
Congratulations and keep up the good work. And it's good to hear that you've got a lot of support from your C-suite, which is obviously very important. Well done. And now we move on to our next award, which is the top-rated consumer services. In third place is Mr. Price. In second place, Woolworths. And our winner in consumer services is Clicks Group. Congratulations, Clicks. Let us see if we have someone to collect. Yes, we have Sue Hemp, who will accept this award on behalf of the Clicks Group.
Hi, Nawandle. Thanks so much. And thanks very much to everyone at Intellidex. I really love what I do, so it's just a pleasure to be recognized for it. And I'm really grateful for having a lot of CEOs in my tenure. We've been doing IR for 19 years at Clicks, and we've had some great support from the CEOs there. So thanks so much.
Congratulations, Sue, and keep up the good work.
Thanks.
And to our next category, we're going to top-rated resources. In third place is Anglo-American Platinum and Northern Platinum in a tie. In second place, Anglo-American. And our winner is Afrimat. Congratulations to Afrimat on their second award. Peter, you can come back and repeat your speech.
Yeah, thank you very much. I was celebrating the award. I was the second one, but yeah, thank you. We are very honored.
Congrats again on your second win.
Thank you.
And our next category is top-rated financial services. In third place, we have First Rand. In second place, Nedbank. And the winner is Absa. Congratulations, Absa, on another win. And I hope your voice can handle one more acceptance.
Yes, thanks, Nwandle. We really appreciate it, and clearly we're getting something right in investor relations, so thank you.
Okay. Well done on your second win. And then our final awards for e-learning, which is top rated overall. In third place, we have MTN. Congrats to MTN for making it third. And second is Nedbank. Congrats to Nedbank. And our winner is Absa. Okay, squeeze out the last of that voice, Alan.
Thanks again. We're really looking forward to seeing your detailed research. So thanks for doing it.
Congratulations. And well done to all of our winners and all of the companies that participated. And just a reminder that the reports will be made available on Monday, and then you will able just to go and see the true details and the list of winners and also the categories. And now let me hand over to Debbie to have some closing remarks.
Thanks. Firstly, I'd like to, take the opportunity to again thank Intellidex for allowing us into the process and to be part of this important independent review. We look forward to you presenting in person at our conference, which is in June. We'll chat a little bit about that later. Secondly, a huge congratulations to the winners on your outstanding work. It is indeed inspiring to see the fantastic work that is being done and to celebrate this. So the work, is being done in the space, but now actually being recognized and seen by the market. As Stuart said earlier, today's the day of celebration on all the good news. And I'm sure there'll be a lot of unpacking once we see some of the dirty laundry as well. As IROs, we enjoy engaging with people and thrive on feedback. You can be assured that the insights we receive from the survey will be put to good use. For us, these insights are very valuable and a great starting point in helping us to understand where the challenges lie to better inform the topics for our events, our collateral that we produce as we strive to improve the effectiveness of the profession in reaching its full potential of unlocking value for companies listed in South Africa. I think it may be worthwhile just to, again, spend a few minutes on the IRO Society's vision and tell you a bit about who we are and what we're doing. We initially started in 2015 as a platform of IROs for IROs. But given the recent trends in the space, we've recognized that the benefit of engaging a more diverse set of players, we therefore have evolved our vision to building a community that involves all the market participants, including buy and sell side, service providers, C-suite, as well as, of course, the IROs themselves. And we think that it is a more relevant approach for today's IRO world and will be greater benefit to all in terms of networking, gaining different perspectives, and learning from each other. To support this vision, we have recently appointed additional board members to broaden the expertise and knowledge of the board. So we're not just IROs, and we're able to deliver a more comprehensive program to expand our offering and meet the rapidly evolving requirements of the market. It's so interesting because a big theme for 2022 will be sustainability. I'm sure you'll agree that it is the hot topic, and we hope to help navigate through this important journey, which is increasingly becoming relevant to regulators and investors alike. Companies have long talked about triple bottom line, but changing disclosure demands, more diverse remuneration metrics, different loan instruments and targets are now effectively putting that to the test. To put this into numbers, according to Morningstar's latest funds flow report, sustainable fund assets expanded to almost $3 trillion at the end of 2021. This is a 53% expansion in the global sustainable fund universe in just 1 year. So certainly not just a hot topic, but incredibly relevant. As you can imagine, the past 2 years have been challenging. We couldn't roll out as many events as we'd like to due to COVID restrictions, but I'm delighted to tell you that we've put together a full program for 2022, which we're really pleased about, and we'll be extending our in-person events to include Cape Town and Durban-based IROs and investment community. This includes our flagship conference in June, where we have a great lineup of speakers. Stuart, we holding thumbs that you will join us. We've made a space for you. Last year, we had more than 100 people attend our virtual conference. And now with broader membership base, we expect a much bigger turnout. Also with it, we're expecting it to be hybrid and to be able to network in person. So great networking opportunity. We're also introducing online monthly roundtables, which are focused on these various hot topics and best practice from experts. I'd really like to encourage you to join the first one on the 7th of April, where we go into more detail on what we have planned for this year, how to better utilize the society for your personal and career growth, as well as representing the community on top advocacy topics such as voting of REM that we spoke about earlier, access to information, including trading information, C-suite forever banging down our door, who sold, who bought, etc. So I think really important topics that we tackle as an industry. The first few roundtables are open to everyone at no cost. We have recognized the need to upskill talent through shared experience and best practice, and no textbooks can teach you that. So we've had so many people reach out to us for training that we're currently putting together mentorship training programs and technical guidance papers, which we think will be very valuable. And lastly, as we said, we love feedback, and we'd love to hear from you at the IRO Society on any suggestions you may have to improve our program. Obviously you haven't had a chance to experience it, and as it unfolds, feedback vitally important to us. We do encourage you to support us as a member or get involved as a participant at our events and forums. As a community, we are so much more powerful and innovative. So if you want to know more, please join us on the 7th of April for our first roundtable. Details and registration will be available on our website or through our LinkedIn social media, or get in touch with any of the board members. Once again, a big thank you, congrats to the winners, and very, very excited for where this is taking investor relations in the future. Thanks again for including us. Over to you.
Thank you, Debbie, and we look forward to more events like this and a continued relationship. We fortunately missed Nomonde Kulush to accept on behalf of Transaction Capital, but it seems like maybe she's no longer online, but they were a big winner of 3 awards today, and congratulations to them. So last speaker of the day is Stuart. Can I hand over to you?
Hi, everybody. Yeah, thanks very much, and congratulations to the winners. It's really exciting to see everybody come through in the awards. You're going to see on Monday with the booklet that there is an extensive amount of detail with all of the scores and how they were composed to end up with the results. I just wanted to say a vote of thanks, firstly to our team at Intellidex. Nwanda has been a great MC, so thank you to her, but also to the rest of the team. Heidi Dietz, Pumla Duma has been running things in the backgrounds during the presentation. Colin Anthony and others have worked on various aspects of this project. A big thank you to Jennifer Cam and her team at Lingo Communications. They were partners in bringing this project to life. Jennifer has worked extremely hard, banging the doors and the many phone calls to chase respondents, to complete surveys, and to put together this event. So thank you very much to Jen. A big thank you to Debbie Miller and the Investor Relations Society of South Africa. Debbie was really helpful in providing input in some of the design phases, and has been really great at sharing the awards with the investor relations community. So a big thank you to Debbie. And then a thank you to CFA Society South Africa. The society board was an enthusiastic supporter of the awards from a sell side and buy side perspective. Their members were very active in helping us think through and to circulate the survey. And a thank you also to Business Day. Business Day are the publishing partners on this. The awards are going to be the basis for a special publication that's going to be published on the 14th of April. So all of those companies who have featured in these awards, you will be getting that visibility as well. There is a detailed publication being put together by our team. Those of you on the IR teams of today's winners, you should probably expect a call from someone on the editorial side just to get your input into some of the editorial that's being drawn up around these awards. So that publication will be out on the 14th of April. And our thanks very much to Business Day as our media partners in the awards. I also just want to say a bit of a commercial message is we will be circulating also on Monday an opportunity to order bespoke reports from us. So we've gathered obviously a lot of data through this research process. We're willing to, of course, share that data with you, and we can draw up bespoke reports to draw out specific analysis that you might be interested in on your company's performance. We will send you some details on that on Monday as well. So do look out for that. And as a last word, this is going to be a regular feature of the annual calendar. We are going to be doing fieldwork again in the year ahead. You can see there our email address. If you want to send feedback to the team, please drop us a line. We'd be very grateful to receive it. Have a look at the booklet on Monday, and then of course the publication that's out on Business Day in the middle of April. And we're going to be kicking off with fieldwork again in the second half of 2022, which suddenly isn't that far away. So lastly, thank you very much for all of you joining this call. We've had over 70, 80 participants on the call from the IR community. So thank you very much for joining us. It's really been great to be able to present these inaugural awards to you all, and congratulations to the winner. And I look forward to further engagement and to seeing you again next year. Have a great rest of your Thursday evening. Goodbye.